is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
This is awesome. Come on, Parlez-vous. We're going over to Paris. What's happening?
Hey, Tom, it's Adam from Paris. How are you, sir?
I'm doing great. Adam, yourself?
That's good. Long time no talk. I appreciate everything you've done for me and my family over the years. So,
well, we appreciate you growling and prowling with us.
Yeah, sir. I've done gold reports and all the softwares and all your books, and it's generational. Thank you.
Thank you so much. Appreciate it.
Yes, sir.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday afternoon. We got quite a day in the markets to the downside, folks. One tool from Anthropic that has everybody saying, hey, you know what? There's going to be more competition than we thought in this arena. And that type of competition coming from that productivity suite of tools, let's pull over the headline because we got markets in the red, and it's just remarkable that this is all it takes for the type of destruction that you have across some pretty remarkable financial companies. An AI tool, and there's your tech sell-off, okay? NASDAQ, yeah, you've caught a little bit from where these were. Now you're down, to almost 2.5% on the comp. S&P is approaching 1.25%. And this is on the last 3 sessions. Okay, that makes more sense. But when you get into it, okay, and let's pull over the headline. One tool, okay, and it's a productivity suite tool. They launched new capabilities for its co-work to the legal space, heightening competition within the space. We view this as a sign of intensifying competition and thus a potential negative. And yeah, you look at some of these stocks that they're tearing apart, and today especially so. As we jump around to these markets, you're right back to the lows of Sunday, and NVIDIA is leading the charge, and this is going to be quite an engulfing we got going on in this market. Already we've done more volume than you did all day yesterday. We've done 1.58 million in the S&Ps. You're off 1.3%. That's your daily. You take a look at the weekly in this one right now. We've been having this type of volatility. And yeah, it's Tuesday, and we're at over 3 million contracts so far. NASDAQ 100, you're down by 2.2% right now. Okay, 25,285. You take a look at the daily, and almost the same thing. You're almost engulfing the entire prior day, and we got more volume than all of yesterday. Yesterday was a big day of volume. You're going to take it out with volume. We've already done almost 600,000. You did 570 in the NASDAQ yesterday. The Dow off 350 right now, and the Russell off about 0.7%. You jump over to NVIDIA shares, and yeah, you better be worried, folks. Down 4.3%. It's going to be a big volume day on NVIDIA as well. You've already done 158 million contracts. We're going into this low of January 20th, which is 223. You're not going to do 223 today likely, but on a weekly basis, we jump over the VIX right now. We hit a high of 20.37. We've backed off a bit. You got the VIX right now trading at 19. All right, we jump over the dollar. 97.42. The dollar drops a bit as we've had some strength since we've gotten a new Fed chair. We jump over to yields right now. And we were approaching as high as 4.3 this morning when I was doing the morning program. We were all the way down there at 111.13, and right now we're back to 4.27, the yield on the 10-year, and we jump to metals. So gold, saving itself a bit, more than $500 off of the lows overnight Sunday into Monday. We catch a bid yesterday. We follow through today. Take a look at the volume. Be nice to see a little bit more volume. Not a huge day in the volume. In terms of the type of volatility we've had, you catch quite a bid. Right now, we're at 242,000 contracts on gold, up by 6%. You jump over to silver, up 8.6%. Same thing, though. Not exactly as much volume as you'd want on finding a bid here. Silver right now up by 8.6%, 119,000 contracts. little bit light. We'll see how the final day comes in. You jump over to platinum. Yeah, not surprising. The volume would lighten up a little bit, as in you can't quite match the type of volatility and volume that we've had recently. But you want to see a little bit more buying stepping in. All right, and some of these companies today, check it out. Blue Owl. Okay, check out these private fund managers, folks. This was the article I was looking for. Thank goodness. It was killing me. Check out these numbers. Software slump drags down private credit. This is talking about today. Okay, today. Blue Owl down 12%. Ares Management down 12%. Apollo Global Management down 7%. KKR down almost 11%. Blackstone down 6.1%. Remarkable. Okay, and check out one more statistic from here. These private equity companies, okay, that are deep into software now accounts for about 20% of investments in business development companies, a booming type of private credit. That compares to around just 10% 10 years ago. So it was 10% of the entire business development company, which is a private credit fund, and now they're $1 out of $5, and they were only 1 out of 10 years ago. And now everyone's saying, hey, all this recurring revenue that we set up, okay, and that's what they talk about in terms of these. Here it is. Blue Owl became an evangelist for recurring revenue lending. The firm and others bet that corporate clients would be unlikely to end sticky software contracts because of the difficulties involved with changing technology systems. Well, guess what? Anthropic and all of the AI companies are going to make it very, very simple to do that. That's it. They're going to make it super simple. And you're seeing some of these tools made, whether it's the legal profession or whatnot. And boy, if this is, I mean, think about the amount of money lost in the markets with just one headline. And we'll see if we can get, volume-wise. We don't have the selling just yet on the volume. Okay, on a daily basis, in the same way that we aren't getting quite the bounce on the volume in the gold contract, you're not really getting a pullback on the volume. The one problem, though, is that you are taking it out on yesterday's, right? Not as big as the pullback we had from the highs, but you're engulfing this day, and you're doing it with engulfing with a candle with more volume. And yesterday was quite a day, man. Same thing on the NASDAQ 100. And we got a VIX right now sitting near 19. All right, we're checking on gold 49.41 right now. We're checking on some of the equities moving today. So Palantir with their numbers, strong numbers, but they give it up right on the open. 156 from 166 almost. Palantir up by about 5.8% for their numbers. PepsiCo with big numbers. They're going to be cutting the cost of Doritos by 15%. How about that? Pepsi up by 5% on their numbers. All right, folks, stay tuned. We're coming back with our man Basil Chapman, the opening call, the Tiger Technicians Hour. We'll be talking markets with Basil, folks. We'll come right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps down by 85 points, off 1.2% right now, folks. And to talk about some of the market action, we're going to jump over to our man, Basil Chapman. You can listen to Basil's program, folks, every trading day, 10 a.m. till 11 a.m. Eastern Time, the Tiger Technicians Hour. And if you head on over to the front page at TFNN.com, right in that newsletters tab, you'll see the opening call. You gain access to, of course, Basil's outstanding daily newsletter, folks, okay? Updates every morning. He puts out a weekly video over the weekend, and you gain access to a webinar he just did in December, as well as many others. Check it out on the front page of TFNN under the newsletter tab, and it comes with a 30-day money-back guarantee. Basil Chapman, good afternoon.
Good afternoon, Tommy. How are you?
I'm doing well, man. Boy, we got the Patriots coming up in the Super Bowl, Basil, so you got to love that. Boston again. And we had quite a hockey game down here a couple nights ago in Tampa. But, boy, this market, we got some action, Basil. If you could talk to me, the volatility. Quite a 48, 72 hours right now in this market across the board.
500 points down overnight on Sunday going to early Monday morning. 500 points, over 500 points up at the close. This morning we were up 300-something points. We made an all-time high in the Dow at 49,653. And you can see this chart on the left. I drew this in some time ago and saying this area is going to be strong resistance at the 49,600s. And we went right to that level, 49,653, and we dropped back quite sharply. But the real issue is that if you can just step back a little bit, this is the weekly chart in the middle. On the right is the monthly. The monthly, because we've just made a new high. I know it's impossible to believe. I spoke to you about this 2 months ago, 3 months ago, and even 4 months ago. And what I'd said is that the low that was made in the monthly chart in the Dow at 36,661, and this was back at the low of April of this last year, this is still a single leg to the upside, and it's only a leg A. So because it's a monthly chart, because we made a new high, you can't get a peak A until all of March. You have to wait for the very last day of March to be able to confirm that if you haven't made a higher high in all of March, that will be a peak. So that to me is a very strong sense of the power of, it doesn't tell you how high you can go, but it tells you in the Chapman wave methodology, there should still be a peak A, then a leg B, a peak B, and then a leg C, and a peak C, and then a leg D. That takes you into at least another 5 or 6 months. So it doesn't say, once again, it doesn't say how high you're going to go. You can't extrapolate and say 36,661 to the high of today, 49,653. That's 36,000 to 49,000. We're talking about 13,000. It's amazing. You can't extrapolate and say, oh, we can double that. It just says there will be higher peaks. So that to me is very important. That's number one. But stepping back, the weekly chart keeps hugging this pink 9-period moving, this pink inside track repellent zone. We haven't really broken back up into this pink to green area. That's what I call the repellent zone. Once you break above it, it becomes a propellant zone. But it's just remarkable how, with all that's going on over the last 4 or 5 weeks, look, this is 5 weeks of action, and we are still above the 9-period exponential moving average. So I just wanted to get that aside. So we are still long our core positions in the Dow. But here's what's really fascinating. So we look at patterns, and I showed you a pattern the last week and the week before, and I said it'll be quite something if, let me just put it right there, if the S&P actually goes to a leg D and then maybe a peak D. And look at this. This is from the low that was made. This is just the low that was made back in November, the week of the 21st. We've gone peak A, just a pullback, and then a slightly higher high, leg B, then a peak B, then a leg C, peak C. And last week we made a peak D at 7,002.28. And yet we haven't broken much to the upside. And that's what I'm saying. You see this huge move. You can say, well, we're actually in leg B already in the monthly chart. I can't extrapolate and say, oh, you can double it. I do that, but only after certain conditions are met. So here you are, you've gone from a peak A to a peak D, and you haven't really gone very far, maybe 30, 40 points in the S&P. So you can take time sometimes to make that. So I just wanted to extrapolate. So you had a question?
No, that makes sense. I was looking at that Dow, and so that's the only possible way. That'd be the shortest term way that you could roll from an A to anything else, basically a B, C, D on the Dow, coming off basically a 14,000 point A leg in the Dow.
I mean, this is beyond compare. 14,000 for one leg. I mean, it's unbelievable. So now look at this. Here's the IWM. So we're also still long the IWM, and that's a slightly different pattern. It's been a leader, but look, now it's struggling a little bit. It hit 267.22. It's taken time. It hasn't broken down very much, but it is taking its time, and the weekly chart is still good. But if you're looking at it in terms of the QQQ, the QQQ is this rectangle formation, and it's kind of stalled and it's pulled back. So I think that the Russell 2000 is still showing better strength. Now, I had mentioned to subscribers, the semiconductors look somewhat vulnerable. Advanced Micro Devices comes out with earnings. But I think the upside is also becoming quite limited, at least in the short term, for the semiconductors. And I want to show you a couple of things. So within the context of the positions that we have and why I had that webinar a couple of months ago, and I was talking about what we're looking at in terms of this rotation, that the Mag 7, the really great stocks that were just the leaders for so long, they're starting to stall. And look, all of a sudden, what have you got? You got an Alcoa. I mean, a deep cyclical, doing so nicely. So we've been in since the 43s. It hit 66.95 on the 14th of January. It's just stalling here. It's looking, it's really looking pretty good. General Electric, we're still long General Electric, and it's a 308.34. It's down 37 cents here. It's struggling a little bit, but it's still in this category where you've rotated into the deep cyclicals. General Motors, of all stocks, General Motors, I spoke to you about this last week, made an all-time high, 87.31, holding really General Motors. And you read about the average price of a car is something like $48,000 to $50,000. Why would General Motors be at all-time highs? Because I think business-wise, they've done the right thing. And that's really what the stock is saying. So we're still along General Motors. But that was fascinating, and I've been speaking about this for a little while. There's a rotation into, stocks like a Johnson & Johnson, all-time high today. CL is Colgate-Palmolive. a good recovery, a move to the upside. CLX, which is Clorox, doing really nicely off a low, but if you look at the monthly chart, it's not a very good looking one, but this is the rotation. So we've added Procter & Gamble to this group. I like this very much. It's pushed off the 200 period moving average. The monthly chart doesn't look good, but look how nicely the cup formation is in the weekly chart. So it's very selective. And you and I were talking about this the other day. Well, you've been talking about it for a very long time. But gold, look at gold. I'm anticipating there's going to be what I call the dreaded H pattern. So there's going to be a bounce, and then comes the big test. If it rallies a little higher and then comes back down, if gold at any point starts to pull back below 4,800, then that's the H pattern. I think that's going to stall.
Folks, to read what Basil has to say every morning, great commentary. Check out the opening call and check out that Tiger Technicians Hour. Basil, thanks so much, man. Look forward to the show tomorrow.
Thank you very much, Tommy.
Thank you. We're coming back with Tim Ward, folks. Stay tuned.
A set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We have the S&Ps right now trading off 77 points, 69.25. You got gold right now up $313 at 49.66. And to talk about some of the market action, we're going to jump over to our man Tim Ord. You can reach Tim at his website, folks, ord-oracle.com. And don't forget, under the services tab at TFNN, 2 great webinars: The Secret Science of Market Tops, how to identify market tops with Tim Ord, and 6 secret ratios every trader should know. You check out those ratios right there. Both $149. You gain access to them, and they're on your members page. Watch them as many times as you'd like. Tim Ord, good afternoon.
Yeah. Good afternoon. We're going to stay with the silver gold stuff right now because it's pretty much where we need to be, I think.
Okay.
At least on the bigger time frames. I know a lot of your listeners are interested in this stuff.
They are. I got
and
the,
so
in the
am I.
den, of course, they're talking about. I got a couple emails of people just a little worried, saying, on the pullback, and, we're all looking at it. But, yeah, please, what are you looking at in this metals market? Let's do it.
All right. So, the bottom window is the silver stocks compared to silver. So that's like gold stock compared to gold. There's also a silver stock related to silver. And this chart goes far as back as I can get it, which is basically 2010. And it's just a ratio of that. So anything below 1.25, which is that green area right down in here, this is a long-term chart. So this is a monthly chart. That's where valuation-wise, that's where you should basically be buying. But this buy period lasted, it looks like about 6 months there. So it's not designed to catch the exact bottom, but it's designed to get you near the lows, but it doesn't try to pick out the exact day. It basically stayed bullish all the way from, early 2023 and stayed bullish all the way into January of 2025. So it almost stayed bullish for a whole year. And this is the monthly which is SIL, which is the ETF for silver stocks. So this whole area in here was the buy signal. So that ranged from basically 20 to it wasn't quite 20. It looks like 25 to 40 was the buy area. If you did that, the high looks like about 120. But what's curious right now, keep going another further step here. This is this kind of a sell area. That's when silver stocks are expensive compared to the price of silver. And that ratio is up around 2 to 2.3 up in this region. Every time it got into that region, these were the highs going back. And it did a pretty good job picking out the highs. So we're not even near that. We're actually closer to the buy area right now. We're at 1.28 on this chart. So on a long-term basis, silver stocks compared to the price of silver is actually near a good buy. So, can we use that information? Oh, yeah. Let's go to another chart. This is exactly a same chart. It's the same chart, but I did a different method with it. The top window is again the SIL to SLV ratio on a monthly time frame, and I put a Bollinger Band with it. So when this ratio is rising, that means silver stocks are outperforming silver, and you should be in silver stocks. That's going to outperform silver. And we got a bicycle, looks like about mid-2024, and it stayed on it, and actually just gave a sell signal here late. Probably looks like November, December, because the buy signals occur when this ratio gets above the mid-Bollinger Band, and sell occurs when it falls below the mid-Bollinger Band. So you can the green one is the buy signal, the red one, dotted lines, is sell signal. So, you got in basically mid-2024, and you got out in November, December, which is probably back in here. It looked like maybe around 60 or so. It went up to 110. So, but these are long-term charts, so they're not meant to catch the deal. But right now, according to this ratio, it'll turn back to a buy signal once you get above. Sorry, what happened here? Hang on one second. Once you get above, it looks like about 1.35. In that vicinity. But let's get back to this chart. So this chart it's the same chart, but with a different information on it. It says it's a good buy at current prices, even though this chart here says we're not above the Bollinger Band yet. What that tells me, there's no downside here. This market's not going to pull back and retrace some like 50% of its last move up. It's probably going to move sideways. That's how I'm interpreting the information. Is that make any sense? Does that make sense to you, Tommy?
Yes, no, it does. I mean, I see that, there's so much volatility that I could see some downside. Just to say no downside. But yes, no, it's quite a pullback, man. Silver just traded $50 off of highs to lows, right? We've never even traded at $50 before outside of a few times in history, outside of a few months ago. So that's quite a pullback. Maybe you get a consolidation. I do. I appreciate it. It's just quite a market for sure. But yeah, I could see... we're not at $121 anymore, which is tough to see how it maintained there. But, 75 to 85 or something like that even? Yeah, maybe, right? Yeah.
Actually, what I'm saying is, since we're basically pretty close to the buy area, I just still think there's any downside here. So we may have let's go on and look at some more charts here.
Well, is that because that's silver versus the silver stocks? But what if they're both trading lower? Right, the ratio still that's that's
a possibility. But normally, if you have let's get back to this chart. This is kind of not off the subject, but it's kind of the same parameters. What's going on? We keep talking about this. This is a 12-year cycle. The chart goes back to 82, approximately 80, whatever, and it's the XAU to NDX chart, so it measures gold stocks against the NASDAQ stocks, and you had initiation of an uptrend, which hasn't happened since basically 2003. But what this implies, this is a change of character in the market. That's how they call it. When the previous indicators kind of failed, some new indicators come to the forefront. And these new indicators predict or are the ones accurate to predict what's going to go on in the future. And this one, since it did get above 70, since for last time it did that was close to 20 years ago, this initiated an uptrend. So this RSI staying above 50 for the next 12 years. Well, I hear the music coming on.
That's it. We'll finish it up, folks. We're coming back with Tim. We're talking XAU, NDX. We're talking gold. And we got the markets catching a little bounce off the lows right now. S&P's just off 65 points right now. And yeah, that's a bounce of almost 50 points from the lows. We're coming right back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P is off about 1% right now. NASDAQ 100 off by 1.8%. We're talking with Tim Ord. Don't forget, folks, you can reach Tim at his website, ord-oracle.com, and under that services tab. Couple great webinars at TFNN. All right, Tim, please go forward.
All right. What I'm trying to say is basically we're at a unique time in history that you just don't want to pass up. We're gonna skip a little forward here. This is an indicator that's really worked well. It gets you close to the bottoms. This indicator is the get my drawing tool here. This indicator is the bullish percent index for the gold miners index / GDX. So the bullish percent index measures the percent of stocks that are in point figure buy signal for the gold miners index / GDX. So it's a ratio again. And what I did was on this ratio, the ratio goes back to 2014, and I did an RSI with it. RSI 10, 14 just didn't work as well. But anyhow, anytime this RSI of this ratio got below 25, we're at 23 and change right now, then gold stocks were a buy. And so I marked all these blue lines in the past when that's happened. The previous 13 signals all were basically all winners. So that's extremely, it's extremely,
cool.
Sometimes, sometimes you can move sideways a little bit like that one did, but in general, you're at a low here. And so this market's not going to go down. It may flip sideways, but what you're probably going to have is a big rotation, where the big ones, I've been saying this for the last several weeks, the big ones are going to take probably a consolidation, and the small ones or the midterm ones are going to start going up. So it's just a big rotation going on. So it's not like gold stocks are going to take a big dive here. All that dive and all that consolidations past us. Now we're in the impulse wave of this rally. So if you step out, they may not let you in. But anyhow, this, it's basically anything in the blue area, which is basically 1 to 0 in here is the buy area. That's the reason why I went all the way back. But the RSI is in there too. So you got in the blue area, and you got the RSI below 25 is coming in 23. So so let's kind of look at the short term. What's really going on in the short term. This is the 50-day average of the up-down volume and 50-day average of the advanced decline for GDX, for the stocks in GDX. Anything below 0 is in a downtrend, and that's all these white areas. Anything in blue, when both these indicators are above 0, and that's all the blue areas. And even though the market has corrected here, this indicator, both of them, advanced decline, is actually holding strong. In other words, there's still stocks going up in the ETF or the stocks in GDX are still going up, along with the up-down volume. They're not really weakening here. They're holding close to their highs. So there may be a couple of stocks going down, bringing down GDX, but majority of the stocks are still in bullish configurations here. So there's not a sell signal on a short-term basis here. And even though this area back. I forgot what that was, but it was a big correction where I got out of the market and got long again. I got it long around 75, but it went from 95, I think, to around 70. And so it was one of the reasons why I got back in was this indicator. And it's still not showing any weakness on a short-term basis. Matter of fact, the last time back in, looks like about October there, it got over 30. And the last time that did was 2019. And the market rallied for another year. So that means we could rally. It's not a lot of examples that do that, but that's an unusually strong market for this indicator to get above 30. And last time again, it was 2019, so that's quite a few years ago. So can we go until October? Yeah, maybe. What I'm thinking is going to happen here is this indicator. This is the XAU gold ratio. And this thing has been trading sideways since 2013. It basically bounced around between 0.04 to looks like about 0.09. And I'm thinking this indicator is not going to back off from this high 0.09 range. We're 0.08 right now, but in this vicinity, 0.08, 0.09 depends how you do it. But I bet we just hug this line and actually start creeping up, and because these indicators just don't stay in that range forever, between 0.04 and 0.09. At some point, you're either going to break out of it, either up or down. Well, all the statistics say we're going to break out of this indicator to the upside. Well, if you break indicator to the upside, what's that mean? That means gold stocks will outperform gold. And gold over the last several years way been outperforming gold stocks. Gold stocks are now going to come to the forefront. Does that mean gold's going to go down? No. It just means gold stocks are going to outperform gold. Both of them may be going up, but gold stocks are going to go up a lot faster. Well, what's that mean? What's the next resistance? Well, the next resistance is up against these previous lows we had back here, and this previous high right here. And that's approximately 0.19. Round up numbers, call it 10 or 20. And so we're at 0.08 to get to 20. That's about 2.5 times up. Without gold moving, gold stocks would go up 250% from here. If gold is still going up, which I think it will, and gold stocks would have to probably go more than that. So we're still in the early stages of the bull market, even though things have gone nuts over the last couple of years. This is still in the early stages. Getting back to this chart here, where did I put that chart? This is from right here, where I said, probably the next 12 years is a bull market in gold stocks. And that kind of says what we're going to have. We're going to have a lot of these stocks that are they're 5, 10, 20, 30, 40 cents a buck, $5 are probably going to go 10, 20, 30, 40, $100, and it's going to go nuts. And I've been in this bull market. Actually, me and your dad were in this bull market from 2000 to 2012, and things just went totally bonkers. And from 2012 to 24, I guess, things were just terrible. So we're now back at the good times. So gold stocks are not long-term investments. You can't buy a gold stock now and in 30 years retire, because it'll probably go through 2 cycles between now and then. Well, the current cycle for gold stocks is up, and it's up for a long time, at least another 10 years from current time frame. So it's a good place to be. Next show, I was going to show you how to pick out the gold stocks, the ones to avoid and the ones that you should look at. And it's all about volume, and it's all about momentum. And we'll kind of go over those buy signals. How do you pick them out? Which ones to stay with, which ones don't. And we'll kind of look at some weak ones. We'll look at some strong ones, and we'll show the difference between the two. And I think that's a place to be over the next months, if not years. And there's a lot of them still out there that are the ones that a lot of them have run their courses, but there are a lot of them are just starting to come off the bottoms, and we'll look at those. But volume is going to be an important aspect of those signals. I'll put those out on Thursday. So you got to show up on Thursday.
Perfect.
So.
I appreciate it. I look forward to it as well. So we'll do it Thursday, folks. 48 hours from right now. There we go, man. We'll talk some different equities and break it down. Can't wait to see the volume as well. Tim, appreciate your analysis as always, man. And I look forward to talking to you for that program on Thursday.
All right. Thanks a lot. We'll talk to you then.
Okay. Take care. All right, folks. We're coming back. One more segment. S&P's negative by 64. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97, and with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. You got the home builders. So we jump over from builders push for Trump homes and a pitch for millions of homes. So yeah, builders are working on a plan for a massive program to develop Trump homes. Listen, I had said, okay, well, we're just, nationalizing companies. Why haven't we nationalized a company to build houses? Okay, and they should do something. I don't think they should nationalize them, but I think the government should do something. You talk about emergencies. You better believe we need more houses, period. Okay, you got Lennar, Taylor Morrison Homes are among the firms that have worked on a proposal which calls for the builders to sell entry-level homes into a pathway to ownership funded by private investors. Okay, on the one iteration of the plan, investors would rent out the homes to tenants whose monthly payments would, after 3 years, be counted towards a down payment if they wanted to purchase a home. Anything you can do. Okay, there's got to be programs, period. Right? Nonetheless, you get the home builders catching a little bit of a lift today. Lennar, there's your acceleration on that news. You give back some of it, but I've talked about that. I think I'm a bull longer term on these, and yeah, you may face some volatility. Okay, but you back this up, Lennar, 2 solid weeks of volume, and that's when they really started to come to us. Say, you know what, this might be. You pull back to a low of 112, and then you accelerate on volume. And if you look at that week of November 17th, and remember the following week, we did almost 45 million shares as you traded to this high of 132 in Lennar. That was 3.5 trading days. That was Thanksgiving week. Okay, so all that volume took place in this little run higher. Look at that volume, that mess of volume on a trade higher. What do? You come back on vapor thin volume. We're catching a bid today. Lennar up by 3.2%. But yeah, you look at the underperformance of these equities. If there's anywhere government should be in to help the people, let's get some homes built, right? D.R. Horton up by 2.5% right now. KB Homes up by 3.1%. You got AMD earnings after the bell, down 1.5% right now. And yeah, quite a day in the NASDAQ, folks. Protect yourself, whether you're in the market, in metals, no matter what you're doing, make sure you're protected, folks. We got quite a volatile market. Thanks so much, folks. Have a great night. Have a safe night. Appreciate you being here with me at TFNN. We'll see you tomorrow morning, folks. Have a great night. Thanks.